Hello, I'm Francis Land, Vice President of Corporate Services at OTC Markets Group here in London. Today I'm very pleased to be joining Andre Liebenberg, Chief Executive Officer at Cake Plc. Cake offers investors direct access to the uranium market, and their ordinary shares are traded on our OTC QX market with the ticker symbol YLLXF. Andre, thank you for joining me today.
Thank you very much for allowing me to be here and participate.
It's good to see you. As we start, I was wondering if you could give me a brief overview of your background and the origins of Cake.
Sure. I spent 15 odd years with Billiton BHP, right from the beginning of Billiton through the merger, and then with BHP. I was then in private equity in mining. And then in 2017, we started looking at setting this entity up. We IPO'd in 2018, so I've been involved since the beginning. As I said, my background is principally, I started out as an engineer, but my experience base in the resource sector is on the commercial finance side. How did this come about? Back in 2017, Kazakhstan, and in particular Kazatomprom, had become the world's largest producer of uranium, but they were putting a lot of product onto the spot market, and the spot price had dropped from pre-Fukushima $75 down to $17 a pound at its low. And they were looking at a means to offload some inventory and kind of rebalance the spot market in a sense. There was someone I knew, a friend of mine, who had access via a board he sat on to Kazatomprom, and through that process we looked at a company then listed in Canada called Uranium Participation Corporation, and really copied their structure and set up our own entity based in London, but doing exactly the same thing. So buy and hold uranium for the long term.
And you're touching upon it there, but actually thinking about your operating model, the early days of the company, what is it, do you think, that makes your operating model stand out? And what drove your early confidence to obviously create the new venture?
Yeah, let me deal with the second question first. What drove us? What was our thesis when we set Cake up? It was basically supply and demand. We looked at the supply side, and at the price of when we bought our first uranium, let's call it $21, half the production industry would have been underwater. The reason they were still making money and still producing is they had long-term contracts with utilities. That's typically how this industry works. But those contracts were rolling off. Some of those contracts were at prices of $180, $60, and the spot price was $21. As those contracts rolled off, they weren't being replaced at contracts at the same price. So we saw quite a lot of production shut in because it was uneconomic, but also post-Fukushima, very little money had gone into exploration and development of new projects. So when we set up, uranium demand was forecast 1.5% per annum, and supply was static and didn't look like it was going to increase. So it really was a supply-demand story. And if we kind of roll forward 7 years now, it's the same story. All of the projects that were on the drawing board back in 2018 are still, none of them have started construction, the new projects, greenfield projects. And yet demand forecasts have now gone from 1.5% to probably 3%, 4%, 5%. So we've got a much healthier demand side and still a challenged supply side. So that really is the thesis that underpinned our IPO, and it's still relevant today. The price has gone from $21 to $77 on Friday, but I think the price could double. It's not yet at a level that's incentivizing new production, and because new production takes a long time to come to market, you're always going to get overshoots. Yeah. So we really believe that the price has still got a way to go, and could go up still substantially.
You've actually already touched upon the supply and demand of the market. I was interested to know your feelings about the current state of the market. You've touched upon that. If you want to expand, please do. But otherwise, interested to know kind of where you think Cake's position in that market is, as we talk today.
So our position is, we've created an entity where investors can express their view on the uranium commodity. You can own gold at home, you can own copper at home, but you can't own uranium at home because all the regulations around it. So really, we've just created an entity that allows investors to express their opinion or their view in terms of the commodity price. If you look at our balance sheet, on a pro forma basis, 23 million pounds of uranium, we've got $70-odd million of cash. There's nothing else. It's a very simple structure. But just to go back to supply and demand, because that is the important piece of our investment thesis. So today, supply on a global basis, 160-odd million pounds. Demand, reactor burn, about 180 million pounds. So we're running a primary deficit today. The World Nuclear Association came out with their biannual forecast a month or so ago, and they're talking about the demand side requiring supply to anywhere from double to triple by 2040. So if you take a supply side of 160 and a demand of 180 million, so how are you going to get 160 million pounds of production to 360 million pounds if you take a doubling in essentially 15 years? In the uranium sector, it takes typically around 16 years from finding a resource, permitting it, constructing it, commissioning it, and bringing it to market. In this sector, 15 years is just around the corner. So we still see a supply side that's challenged and a demand side that's getting more exciting as, we've seen this sort of move from, energy, being green, nuclear in the being green sense, to moving to energy security. And the nuclear assets are now viewed as critical infrastructure because of energy security, energy growth, and decarbonisation.
Thinking about your own uranium holdings, what is it you focus on as a company when you're looking to raise capital to boost those holdings?
Yeah. So we've got this contract with Kazatomprom that allows us to buy up to $100 million of uranium per annum. And it's completely at our option. We can do all of it, none of it, or in multiple tranches. And the key trigger for us to look at exercising that option is whether we trade at or above our net asset value. So if we trade above our net asset value, at our net asset value, we would look to issue equity and buy uranium. If we trade at a discount, we don't. That's dilutive to existing shareholders. So a few weeks back, we did an equity raise. We were looking to raise $125 million, so for the option plus some working capital. The demand was unbelievably strong, and to the point where we upsized to $175 million. The support we got really, was surprising to the upside significantly.
Right, fantastic. Again, thinking about communication with investors, you already touched upon the clean energy aspect. Mm-hmm. Talk to me, if you can, about how you communicate that green energy value to your investors.
Yeah, and it's now going beyond just the green energy value. Obviously there's a lot of excitement around data centers, AI, and SMRs. But a few features on nuclear. Nuclear capacity factors are about 90-95%. If you look at wind and solar, it's in the 30%. So you need 3 times the infrastructure of solar and wind to give you the same output as nuclear. So that's the first thing. And nuclear power stations can run 24/7. You refuel them every couple of years. You take them offline for a few months, refuel them, and then you just forget about them. They kind of hum along in the background. But we're seeing now, and the really exciting part of where this industry is going, is the coming together of policy, regulation, and the combination of private capital and public capital. And I think the best example, if you go back to just last week or the week before, when Westinghouse, the US government, and Brookfield announced this, joint venture, call it, $80 billion to invest in nuclear. So that's a government, supporting with policy, with funding, and 2 private companies, providing technology and funding. So I think that's the exciting part, this sort of convergence of policy, regulation, and public and private finance. You look at the 2 reactors here in the UK, Hinkley Point has got Apollo, so private equity involvement. Sizewell C has got public and private, funding participation. And I think we have to go down that path, these sort of hybrid models, because these assets, if you look at a new reactor today, it could run for 100 years. If I just sort of turn back to the supply side, a typical mine life is 20 years. So for each reactor today, you need 5 mines. And if it takes that long to develop these mines, the industry needs to be thinking about it now.
Andre, you just mentioned the United States. As I mentioned in my introductory words, your ordinary shares are traded in the United States on our OTC QX market. As we finish, really interested to hear your experience of the OTC QX, how it feels like it might have impacted on your US investor base and visibility in the States, if you could.
Yeah. Our reason for going to the OTC is firstly to give us, as a UK company, visibility, but also, when we IPO'd, our share register was 50% UK. We didn't have a retail offering. It was 50% UK institutional. Within 3 years, our share register was 50% North American. So, it wasn't a case of accessing, it was a case of giving access to that market. And then we've gone from having no retail shareholders to having 30% retail shareholders. In our top 10 share register list, we've got 4 retail platforms. So that's where the OTC plays an important role for us, giving retail access to our share our share register. And the US and Canada, they understand uranium, they understand nuclear. It's a market that gets it and invests in it.
That's great to hear. Andre, thank you again for joining me today.
My pleasure, thank you.
And if you'd like more information about Yellowcake and other companies that are traded on the OTC QX market, please do visit our website at otcmarkets.com. Thank you.